Hi, welcome to Market Alert for Tuesday, the 8th of October 2019. So yesterday Bitcoin bounces back above the 8K level, and as it says here, this is historically strong price support which we've seen the market bounce off many times. So let's have a look. I'll start off with the daily charts, and you can see the buying there coming in yesterday. Also, along with the 8K support, you've also got the 76% retracement there, the market bouncing off this as well. So two factors there. The market still remains in a consolidation phase, but this is sort of the building of energy before the market makes its next move, which should be to the upside. We never know, but that's would give the way the market's actually consolidating and bouncing off the 8,000 level would be the highest probability at the moment. And also given when you look at the weekly chart that we've been coming off the lows from January of this year as well. So you've got a nice healthy pullback going on in the weekly chart there as well. In the 4 hour you can see the market testing and then moving higher as well, with two 4 hourly bars of buying as well supporting the move. So really good support there as well. The only thing to note in the 4 hour is that if we come back to this high to this low, you'll see we've got a bit of resistance here at the 8348 level. So just keep an eye on this as well. We'll just save this and I can refer to that whilst watching the markets. So yesterday morning, the market, we had this low overnight where we saw the buying coming into the market, profit taking. We get a pullback, 76% there. The market trades up to the 50 bar moving average and then pulls back another 76%, which is from this low to this high. That being the case, the market puts in a buy signal and then the market breaks the 50% moving average. The 20 crosses the 50 then as prices pull back a bit and then continue up to the 200. Now at this point normally you would get some resistance, and we do, and we can see this with the selling pressure that comes into the market here from this bar, and then there's some weakness until the market is able to drive through it. What's important here is that prices, once they close above the 200 bar moving average, then find this as support and then continue to move higher. And this is really important because if you were trailing the stop, here's the original buy signal, the market trades up to the scalp, we then move the stop to break even and then allow the market to move higher. Normally we would just keep moving the stop 50% below the rising lows, but here we have a situation where the market is sitting on the 200 MA. So given the track record of once the market breaks at this level, there is the chance that prices will move higher. It's worth holding back a bit until the market has established these new rising lows as prices break out. Also, keep in mind here as well, you always look to the left and you've got resistance here. We know we've got resistance because we've got the selling there. So in order to break through resistance, you need new buying, and then we see this huge buying coming in. And once we get this, then we can consider trailing the stops until the market naturally takes it out, which would be around here. And I'll just draw this in for you so that you can see. So the market then continues to move higher, and then you've got your 50%, and you'll see it comes back to here before taking you out on the trade, unless you go for the previous day's high or whatever else you choose to actually do to manage it. But keeping the sort of emotions out of it, that's how I would trade what I actually see and what is being presented to me. I can't see what's coming next, so I like to try and keep it as mechanical as possible, as shown here. But this is the important part here, very, very important. that the market had closed above the 200 bar moving average and then continued to move higher, and then to trail the stop at this point as opposed to before. As long as prices remain above, then there's a very good chance the market will continue higher, and then it's just a matter of trailing the stop, and if you're taken out, you're taken out. But the key here is to keep it as mechanical as possible and not emotional. Right, let's have a look at the Dow for yesterday. We've got all sorts of problems brewing in the stock market. Stocks chop on repo ramp, Kudlow comments, trade trouble, and Warren whoosh, whatever that means. I don't know what Warren Buffett's been up to. Obviously trying to pump the markets. Kudlow used to be a commentator on CNBC. He's now part of the Trump gang, and obviously trying to pump the markets as well. Repos, a lot of problems in the repo markets. Repo ramp, this is now extended to the 4th of November. It was a temporary thing, so the banking sector requiring more liquidity. And again, this is just building up in the background, so keep an eye out for it. Let's have a look at the Dow. See if I can find it. Here we go. So yesterday the market trying to move higher, but then coming down before the close. Today the market opening and then attempting to move higher as well. And I'm going to say it again, this market is looking incredibly weak and tired. Even with the Kudlow comments, the Fed, Powell was out yesterday. This market isn't driving to the upside like it used to. Something isn't right with it. That's for certain at the moment. But going back to the start of yesterday's session, we see the market break the 200 bar moving average. We see the market test. We see the market pull back. Where does it pull back to? Right back to the 200 MA. So we've got the same pattern that we seem to have had for a very long time in the Dow there. Now it doesn't come back to 76% on this occasion, but we have the 200 MA. If it had broken the 200 MA and moved lower, then we'd have looked for a reversal back. So basically we just skipped one of the steps here. The market then puts in a buy signal, and the market then moves and makes its way 200 points higher before the market then moves lower before the close. And again, this is this weakness that I'm talking about here. You can see prices come down to the 200 bar moving average. They trade back up to the 20 bar MA and then back through the 200 MA. And you can see this bar here, how the market was trying to be held. You know, traded higher and then it ended up being slammed through. Big range bar there. Again, significant at this 200 MA line. Never ceases to amaze me how this is working at the moment. You've also got prices then dropping down, finding support at the psychological level. And if we come back to the retracement tool, you'll see prices again heading back towards the 76%, but finding support at the previous day's close. And then once they break the 20 bar moving average, they move up to the DP level. They pull back to the psychological level and the 20 bar MA, and more importantly, the 200. And then bounce off this level and continue to the upside until where they've now traded back down to the 200 bar, where at the moment they're finding support. Very important that they hold at this level, because if they break it, they're going to make their way back down. But it is looking very weak, this market. And also the implied volatility is pointing in this direction as well. Yesterday we see this being increased. We're above the average line in the implied, and we're still below the 20 bar in the prices. And this is consistent with a pullback happening in this market. And there you can see the visual of it. So red, and we're below the average there as well. So for me, the downside isn't over in this market. This is still in a corrective phase as far as I can see there. So that's the Dow, and then let's have a look at the pound, see what was happening in the pound yesterday. I'll find the chart in a second. Not a lot. As I said yesterday, this market waiting for Johnson. Not a lot of activity in this at the moment because of the Brexit farce that's still going on. So the pound not doing a lot. If you look at the daily chart, you'll see we're stuck in a sideways range with the odd spike. So again, it's a case of just standing aside until this is see whether we leave on the 31st or not, really. And then finally, let's have another quick look. 10-year inversion of the 3-month still remains minus 0.19. And Deutsche Bank down again yesterday. Interesting with all of the repo stuff going on as well at the moment. So this heading back down towards the Charles Nenner target of $640. We'll see what happens. But at the moment it's hugging the 20-bar moving average, but certainly back through for a nice short trade on Deutsche Bank through the 200-bar MA there. Okay, that will do it for this one. If there is anything else to report today, keep an eye on the news as well. Just check that. Doesn't matter which one we look at. We've got Powell out later today. And also Evans is out having a chit-chat as well. But he'll be overshadowed by Powell at 6:50 there. I think he's speaking in Kansas today. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.